Okay, let's get into this. Buy now, pay later, BNPL. It's just, well, it's exploded, hasn't it?
Absolutely huge.
Millions of us are using it for, grabbing new clothes or sometimes maybe covering a sudden car
Yeah,
repair.
those unexpected costs.
But the thing is, this type of credit, it's kind of existed in a bit of a gray area outside the usual rules for, say, credit cards or loans.
Right, the standard financial regulations.
Well, that's changing now. Big news. The UK government just published its response to a major consultation. Basically, it's a roadmap for bringing BNPL into the regulatory fold.
And it's a significant step. This response document came out May 2025, follows a really thorough consultation.
They got a lot of feedback.
Oh, yeah. 61 responses from, the BNPL firms themselves, consumer groups, trade bodies, even academics. A real mix.
So a broad perspective then.
Definitely. It shows they've listened, and it points towards a clear direction.
And our mission today is to, well, take a deep dive into that exact response. We'll pull out the key decisions, look at the concerns raised by everyone involved, and figure out what it all means for you.
Whether you use BNPL or maybe you offer it as a business.
Exactly. Think of this as your shortcut to understanding where BNPL regulation is heading, straight from the government's plan. So, first up, let's just nail the definition. What exactly are we talking about when we say BNPL in this context?
Okay, so the source defines it pretty clearly. It's interest-free installment credit.
Right.
Typically, you're paying it back over 12 months or less, usually in 12 or fewer chunks.
And crucially,
These specific deals have largely been unregulated under the main piece of legislation, the Consumer Credit Act, 1974, the CCA.
that's the key bit, the lack of regulation.
Precisely. And that means, well, firms offering these haven't needed FCA authorization.
Okay.
And maybe more importantly for you as a user, they haven't had to do things like mandatory, proper affordability checks.
Checking if you can actually afford it before you borrow.
Exactly, or giving you those strong consumer rights if things go wrong, with the product you bought or the loan itself.
Right. So the government's aim is...
It's pretty clear. Make sure people get clear info up front, stop people borrowing more than they can handle, and give them solid rights.
like going to the ombudsman.
Yes, access to the Financial Ombudsman Service, the FOS for disputes, and importantly, Section 75 protection under the CCA.
While still keeping it available, presumably.
That's the balance they're trying to strike, yeah. Keep this popular option accessible, but make it safer.
Okay, got it. So, practically speaking, what's the core plan? How will the regulation actually work?
So the plan puts these BNPL firms under FCA oversight. Full stop.
Meaning the FCA sets the rules.
Yes, the
Right.
FCA can apply its rulebook, including rules on affordability checks, creditworthiness assessments, that sort of thing.
And for the consumer, the big benefits.
Access to the FOS if you have a complaint you can't sort out with the firm. And like we said, Section 75.
That joint liability thing.
Exactly. Makes the lender jointly responsible with the shop if your purchase is faulty or not delivered over a certain value. It's a big protection.
Okay. And how are they technically doing this? You mentioned the old CCA.
Right. This is quite neat, actually. The first step is they're going to disapply certain bits of the CCA.
Disapply? Just turn them off for BNPL?
Sort of, yeah. Specifically, the really prescriptive rules about information, what needs to be in the agreement, how it looks, etc.
What do you get?
Well, it clears the decks. It lets the FCA then design and implement its own brand new set of information rules specifically tailored for BNPL.
So bespoke rules for a modern product.
Exactly. The thinking is the FCA can make rules that work better for digital products, leading to better consumer understanding than just trying to shoehorn BNPL into the old paper-based CCA framework.
Right, that makes sense. Okay, now, this is where I think it gets really interesting.
Yeah.
The scope. Who's actually covered by this and who isn't?
Yes, the scope debate. Always contentious. The government is sticking to its guns here.
Which means...
Regulation for BNPL offered by third-party lenders. Your Klarnas, your ClearPays, those kinds of firms.
Okay, the big names. But who's out?
They're leaving BNPL provided directly by merchants out of scope, for now.
So, like, if my gym offers me a 12-month payment plan directly.
Exactly that kind of thing. Or maybe a local furniture store offers its own interest-free credit. That often falls under an existing exemption, Article 60F2.
And the reason for splitting it like that?
Their rationale is the main risks, as they see them currently, are with the big third-party lenders. They want to keep that exemption for what they see as lower risk, often everyday transactions offered directly by businesses.
But they'll watch the merchant side.
Oh yes, they've committed to monitoring that market very closely and acting if they see consumer harm emerging.
Okay, that third-party versus merchant split.
Mm.
It feels like a big decision. How did people react to that? What was the feedback?
Oh, a lot of feedback especially on this. The main worry, voiced strongly by the third-party BNPL firms themselves and echoed by other credit providers and trade bodies.
Was the fair?
Exactly, an uneven playing field. Their argument is, we, the third parties, have to bear the cost and complexity of regulation, while merchants offering very similar payment options don't.
I can see that point.
And consumer groups also chimed in, worrying that, huge online retailers might just launch their own unregulated BNPL, potentially sidestepping the whole regime.
So how did the government counter that uneven playing field argument?
They acknowledged it directly in the response, but they basically said they don't currently see evidence of merchants offering these products at the same scale or risk level as the third parties.
It's a scale thing for them.
Partly scale, partly complexity. They also said drawing a line to catch only risky merchant BNPL without sweeping up lots of harmless stuff, like that gym membership, is really hard technically. I mean, big changes to the whole framework.
So stick with regulating third parties first, monitor the rest.
That's the plan. But they did stress they'll act if problems arise with merchant-provided BNPL.
What about smaller businesses, SMEs? Was there anything specific about them?
Yeah, a few respondents, three I think, raised a point about very small SMEs, sole traders, small partnerships.
Okay.
Apparently, they sometimes use a type of BNPL product, often interest-bearing for business purposes, under $25K.
Yeah.
Which is actually usually regulated business lending anyway.
So it's already covered.
Pretty much. The government response basically said, yes, that type of lending is generally regulated and the BNPL rules align with that. They also added they don't think the specific interest-free BNPL products being regulated here are widely used by SMEs right now.
So SME lending is a separate issue, really?
That's their view. Better handled as part of the bigger picture, the wider CCA reform work that's ongoing.
Right. Let's circle back to those information rules. The government seems really keen to move away from the old CCA way of doing things. Why the dissatisfaction?
Well, their core argument is that just applying the old CCA rules wholesale, which are often very detailed, prescriptive, sometimes feel designed for paper, not apps.
Mm-hmm.
Rules covering pre-contract info, the exact layout of agreements, annual statements, how you notify changes, arrears notices, all that stuff. It would be, firstly, disproportionate for BNPL. It's often low value, short term.
And secondly?
And perhaps more importantly, they think it would actually be less effective at helping people understand what they're signing up for.
Less effective. How so?
They cited evidence suggesting consumers just don't really engage with those super long CCA documents. They just click accept.
So ticking a box doesn't mean understanding.
Pretty much. Applying the old rules might actually lead to worse understanding in practice for this kind of product.
Okay, so the plan is definitely ditch those specific CCA info rules, let the FCA write new ones from scratch for BNPL.
That's the plan. Disapply the CCA bits to give the FCA a clean slate to draft bespoke rules. Rules designed for digital, designed for clarity, designed for BNPL.
And the FCA will consult on those rules separately.
Yep, that's the next stage. They'll put their proposals out for consultation later.
How did that idea go down? Trusting the FCA with new rules versus sticking with the known CCA devil?
Generally, pretty well. Broad support for moving away from the old CCA rules. Everyone agrees clearer info is needed.
But some caution.
Understandably, yes. People want to see the detail of what the FCA actually proposes. The wider credit industry seemed to see it as a positive step, maybe even a model for other credit types awaiting broader CCA reform.
Any specific pointers for the FCA from the feedback?
Yeah, consumer groups wanted to ensure key things, like late fees are definitely prominent. BNPL firms pointed out the digital nature users track via apps, so annual paper statements seem pointless. Maybe monthly digital ones.
Makes sense.
Plain language was stressed, especially for variations, and needing rules that work when people have multiple BNPL deals on the go. There was one specific worry raised, though, about disapplying the CCA rules around arrears and defaults.
What happens when people struggle to pay?
Exactly. Some consumer groups worried this removes requirements for specific FCA information sheets or other protections.
And the government's take.
They pointed to research suggesting those old CCA default notices aren't always that effective anyway. They're pushing ahead with disapplication, but are confident the FCA's own rules on supporting customers in difficulty, which the FCA will consult on, will provide the right protection.
Okay, shifting slightly, what about other specific consumer protections? Things like time orders, or what happens if, sadly, a borrower dies,
Right, so time orders the power for a court to give someone more time to pay. They're keeping that.
even though it's rarely used for BNPL.
Yeah, some feedback suggested it wasn't that relevant for short-term stuff, but the government sees it as a fundamental safety net. So it stays.
And the death of a debtor's rules.
Section 86 of the CCA, that stays too. It requires a court order for certain enforcement actions against someone's estate after they pass away. They checked the drafting, simplified it slightly, but confirmed it applies naturally to regulated deals like BNPL anyway. So those core, albeit less common, legal backstops remain.
Okay, protections are staying. But what about the penalties for firms? The government admits some automatic CCA sanctions disappear when you disapply the info rules. What's the stick now?
That's a really key question. You're right, things like an agreement becoming automatically unenforceable just because of an info slip-up, that specific sanction won't apply in the same way.
So less risk for firms if they make a mistake.
Well, the government argues there are still very strong incentives to comply. They point to, first, being under full FCA authorization and supervision. That's huge.
Okay.
Then there are the FCA's detailed conduct of business rules, CONC, about treating customers fairly. Plus, the big one, the new consumer duty, requiring firms to actively deliver good outcomes.
And the ombudsman.
And FOS access for redress, yes. They also specifically mentioned BNPL firms will have to follow the FCA's tougher rules in CONC on handling arrears and forbearance, and consumers get access to the breathing space scheme.
But some people were still worried about losing those automatic CCA penalties.
Yes, feedback did raise concerns that losing automatic unenforceability might weaken protection, especially for vulnerable people, and be less of a deterrent for bad behavior.
And the government's final word.
They stated they haven't changed the draft legislation on sanctions. They're confident the overall package, FCA oversight, CONC, consumer duty, FOS, provides a robust enough framework.
Right. Let's get into some of the maybe slightly more niche bits. Credit broking and financial promotions advertising, basically. How's that handled?
Okay, credit broking. The basic position is still that most shops just offering third-party BNPL as a payment option don't need to become regulated credit brokers themselves. That's seen as disproportionate.
Just for offering it at checkout.
Exactly. However, they did plan to require regulation for domestic premises suppliers.
Businesses selling in your home, like double glazing or...
Yeah, that kind of thing. If they arrange BNPL for you, the plan was they would need regulation due to potential pressure selling risks.
Okay, did that plan get feedback?
It did, and this is where it got interesting, especially late on. While most agreed standard shops should be exempt, some late feedback from the BNPL sector highlighted a different scenario.
Which was?
Think emergency plumbers, electricians, boiler repairs, people working in your home, maybe offering BNPL on an invoice for an unexpected, urgent job, often smaller sums.
Ah, different from a planned high-value sale.
Very different, they argued. And requiring those small traders to get regulated would be a huge burden, might limit consumer choice in a pinch, maybe push people to worse options.
So what did the government do about this late-breaking issue?
It's a bit of a fudge, honestly. They acknowledge the point BNPL is useful for emergencies, but protection is still needed. But the feedback came too late to fully resolve without delaying the whole regulation package.
Oh.
So they've laid the legislation with the requirement for domestic premises suppliers brokering BNPL to be regulated, as originally planned. But they've also explicitly said they're actively considering this specific issue further. They'll engage more with stakeholders and set out next steps later.
So regulated for now, but watch this space.
Precisely. It's under review. And then financial promotions, the ads. The rule is, if you're an unauthorized merchant advertising third-party BNPL, the ad needs approval from an FCA-authorized firm.
Okay.
Firms moving into regulation via the temporary permissions regime, the TPR, we'll get to, that can approve their own ads for their merchants to use. There was a bit of confusion initially, but they've clarified the drafting. TPR firms can approve their own promotions for their partners, but they don't become general ad approvers for anyone else.
Got it. You mentioned the TPR temporary permissions regime. How does that work? How do existing BNPL firms actually get regulated without just stopping business?
Yeah, the TPR is absolutely crucial for a smooth transition. It's basically a bridge. It lets firms that aren't currently authorized for credit continue offering BNPL while their application for full FCA authorization goes through the
So
system.
it stops a cliff edge.
Exactly. Without it, they'd have to stop trading the day regulation hits. Chaos. Under TPR, they're deemed authorized for specific BNPL activities temporarily.
And what about the rules for individuals at the top during that phase, SM and CR?
Ah, the senior managers and certification regime, holding individuals accountable. The original plan was to switch off the senior managers part for TPR firms, but keep the certification regime part.
But that's changed.
Yes. Based on feedback, they've decided to exempt TPR firms from both senior managers and certification regime requirements.
Why a change?
To reduce the burden on firms and the FCA during the transition, they feel other FCA oversight is sufficient during that temporary TPR period. The legislation has been updated for that.
Nearly there. The sources mentioned a few other connections, data sharing, other regulations.
Yes, data reporting, really important. The government stressed BNPL firms need to report customer data to credit reference agencies, CRAs.
To give other lenders a full picture.
Exactly. For responsible lending across the board. It's not being mandated in this specific law, but the FCA is looking hard at making it mandatory as part of wider CRA reforms. So the government's watching that closely. They also touched on payment services regulations, PSRs. If a BNPL product also counts as a payment service, firms need to follow those rules too. The FCA might design its BNPL rules to avoid duplication where PSRs already cover something. Just a technical point, really. And finally, the equalities and impact assessment. They asked for feedback on this.
And what came back? Any concerns?
It was mixed. Some worried that new affordability checks, while generally good, could potentially restrict access for certain groups, maybe younger people, some minority ethnic groups who use BNPL more but might struggle with traditional checks.
That's the flip side.
Others argued strongly regulation would be positive for equality, offering vital protections, especially for vulnerable consumers, or those with protected characteristics who might be more at risk from unregulated credit.
So the usual tension between access and protection.
Pretty much. Cost to firms and the uneven playing field also came up again here. The government believes its approach balances these factors, reduces harm overall, especially for protected groups. A full impact assessment is coming. Oh, and one tiny technical tweak mentioned making sure an exemption for Scottish social landlords works properly under Scottish law. Details matter.
Wow, okay. That was definitely a deep dive. We've covered a lot of ground there, the why, the who's in, who's out, the big shift on information rules away from the CCA.
The consumer protections staying, the tricky bits around broking and ads, how firms transition with the TPR.
And those wider impacts, data sharing, equality considerations. It feels like we have a much clearer picture now of the government's final plan.
Yeah, the response definitely gives a lot more certainty. They're moving ahead with this tailored approach using the FCA's powers, but trying hard, they say, to keep the product itself accessible.
So boiling it down, what's the takeaway for you, the listener? If you use BNPL, changes are coming around mid-2026. Expect better affordability checks, stronger rights if things go wrong, FOS, Section 75.
But maybe different-looking information designed by the FCA.
Right, and if you're a business, understanding that third-party versus merchant split is vital. Keep an eye on the domestic premises supplier situation. And if you're a provider, XCA authorization is the big next step.
It's fascinating, isn't it, how they're using the FCA's flexibility to tackle this specific area almost as a precursor to potentially wider CCA reform down the line, modernizing regulation bit by bit.
It really is. And, that leaves us with a final thought, maybe. Given the FCA's writing these new bespoke rules, moving away from the old strict CCA format, and it won't all kick in until mid-2026, how easy will it be for everyone, firms and consumers, to actually adapt?
Yeah, and will this new framework relying more on FCA oversight and the consumer duty rather than those automatic CCA sanctions, will it genuinely build trust and change behavior in the same way?
Something to watch as the FCA starts consulting on its specific rulebook, definitely.